Hi everyone. Thank you for joining me on a Tuesday evening. So if you guys don't remember me because I don't appear as often, Isabella here, also known as the financial missy in the social media space lah. So if you guys are with me and you can hear me loud and clear, can you guys just type in the chat that you can hear me loud and clear by saying okay or say hi to me so that I know that you guys are here with me, right? So I know that it's kind of late, 8 p.m., but today I have something very exciting to, to share with you guys. Has the market actually bottomed out? I think it's a very exciting thing to actually, see whether is there any opportunities for us to enter the market or not. So first and foremost, before I start the session proper, if you guys are with me, type hi or type in, yeah, and like this thing so that I know that I am not here alone. Oh, hi Facebook user, you are here alone. Okay. No, you are not alone. I'm here with you. I actually want to share with you guys, where is the direction of the market? Is it time for us to enter? Has the market bottomed out? And what's not. So thank you for replying me so that I know that I can you can hear me and do like this video so that we can start this session proper. Awesome. I'm seeing that more people are strolling in. Nice meeting you, Mansing. Right, nice meeting you here. All right. Now that I know that you guys are here with me, let me set this proper, yeah? So it's very interesting. Last week, we actually saw that the market has kind of rebounded, right? Plus minus, there's a lot of positive news last week alone that we saw that the personal consumption expenditure actually, up by 0.2%, which means that there's actually a slowdown in inflation so far in the United States. So what does that mean? People has been saying that maybe inflation has peaked, right? So this is why if inflation has peaked, consumer discretionary actually up by 3% last week. And what does it mean? What does consumer discretionary mean? I'm not sure whether you guys know, yeah? If you guys know, just type in the chat. For those of you who doesn't know, consumer discretionary is more like, more of a non-essential items that people are willing to spend when there's no extra money people wants to buy, like makeup items, for example. Makeup items are Nike, like all these non-essential goods. When people are willing to spend and there's a demand in the market, this is also called consumer discretionary. And last week itself is a positive news because it went up by 3%. Right. So all in all, right, we saw that Dow Jones up by 6.2% in 1 week alone, S&P up by 6.6%, and Nasdaq up by 6.8%. Right. Well, for me personally, I saw that a lot of green bars. I was quite happy. Like finally has the market rebounded. But today I really want to. I don't have a something like a formal set of slides to share with you because I wanted to make this like a session that you guys can learn to read from the chart itself. So I'll be sharing with you guys directly from the chart, right? If you guys are okay with me, just type okay, right? Because it's something like not scripted or whatsoever. I wanted to show you guys firsthand what do I have for you guys, right? So on top of that, right, we also know last week, right, that the yield for the 10-year US Treasury bond, right, actually went down a bit, which means to say it went down to 2.74% last week itself. Why? Why did the Treasury yield actually went down? Because people were saying that there's more fear of recession. People wants to shift into a more of a safety asset classes and stuff. That's why there's increased demand in the US this treasury note, and hence the yield actually went down. Okay, so but that being said, right, there's the good news. Then there's people talking about recession and fear. Don't you feel that the market currently is a bit conflicted? I don't know. For me myself, I feel that it's a bit conflicted lah, because you see, oil and gas also increased in price. So what does it mean? What does it exactly mean? Has the market actually really rebounded, or is it a potential whipsaw that's going to trap retail investors like us? right? Okay, so without further ado, let me just share my screen with you guys so that you guys can see the chart, the S&P 500 chart that I put up for you guys, right? Awesome. So this is the chart that I put up for you guys. If you guys can see, oh, Mansing sees that recession is coming. Yes and no, yes and no. We will take a look about it. Okay, awesome. So let's look at this chart itself as S&P 500, yeah. So just pardon me if I look down because I do have an iPad here that I wanted to annotate and stuff so that you guys can see. So pardon me if I'm not looking at you guys in the screen, but do look at the screen because the chart is there. Right. Okay. Come. Let me start. Yeah. Okay. So you see in the screen here, right? Let me just draw. Branch. Okay, let me just draw, right? So last week we are seeing from last week is actually today is actually the 31st. Last week is 23rd all the way to 27th. Okay, so 23rd of May is here, right? So it's about here, 23rd of May. You guys can see, then follow me. If you guys cannot see, then just let me know you cannot see, okay? Right, so 23rd of May is actually at this crossbar, right? And on this 23rd of May itself, we saw all these things. Let me show you. Let me put a brush here. 23rd of May, we see this bar here. Okay, this is actually, although it's a red bar, it's actually a bullish bar. All right, because why? Market manipulators actually push the price all the way down, but then it closed higher. I mean, higher as in it closed higher, not at the bottom lah, but it went all the way up again. So you see the body of this bar is actually very short at the top. All right, if you follow me, yeah. And then after that, you see one bar of a positive green, and then we saw a doji here. Okay, we saw a doji here. A doji just means that there's a lot of forces from both sides, and there's high potential to actually cross either way. 50% chance you don't really know what is the momentum of it. Thereafter, we saw three very bullish bar. Okay, so when we look at this particular point, this part, right? What does this remind you, or what does this shows you? Does it remind you of slowly waving up, or does it show you that it's a flush up? Okay, if you guys are hearing me with me, just type in the chat so that I know whether you guys are following, right? But let me just continue also. Right, so for me, right, you see that the green bars are so thick, so big, and it's very, very steep. And it's more than three. Actually, it's three lah. But then it's so steep, right? It's a pseudo flush up, right? So when there's a flush, right, I wanted you guys to know that the market doesn't go in a straight line. Simple as that. The market goes up, goes down, goes up, goes down, goes up, goes down. We see that there's actually a very steep uptrend. Okay, will it go down? I leave it to your imagination. But a very big hint here, right, is the market doesn't go in the doesn't always go in one direction. It always come up and go down, come up and go down. So I want you guys to know, right, that whatever goes up, can come down lah, hor. So a lot of time beginners beginner investors, they don't really know what they are doing, and when they see that there's actually three green bar, oh, what does that mean? The market has rebounded. Yay, market has rebounded. Let us all rush in. Please don't. What goes up must come down. What goes down must come up. So just take a chill pill for a bit. Wait for it to retrace for a while. It will come down. All right. Okay. Secondly, what I want to show you guys, right, is this. Yeah. Let me just come here and clear all these things first. Okay, remove drawings. Awesome. Okay. Very cool, because like before the end of last week, I kinda told my followers who are following me in my Facebook page that last week is going to be a very exciting week. Why? Because I drew this same chart for them here. Okay. So this was actually the resistance point that I actually drew for them. And then this is actually another support that I drew for them as well. Okay, so very simple, yeah. Looking at this particular convergence, right? like convergence, like a triangle kind of thing, right? That we see that the market, right, on last week actually breakthrough. That's why a lot of gurus suddenly says, "Oh, rebounded." Everybody is so into this hype of rebounding, right? But the question is, this breakthrough, right? Just like I mentioned, it's a flash, yeah. Now I want to mention that this breakthrough, right? Is it a real breakthrough or is it a whipsaw? Okay, it's very exciting. Okay, so first and foremost, I want you guys to see this. Yeah, and let me draw some indicators. All right, I'm an indicator person. I like to talk about momentum investing because why? When it goes up, you go higher. It goes down, you go lower. So I want to actually ensure that I'll be in the right momentum to ride on the wave. I don't want to go against the wave. So let me just show you this particular indicator. Okay, this indicator itself is simple moving average 20 over 40. What does it essentially mean, right? Is if the 20 is above 40, that means the market is bullish. If 40 above 20, the market is bearish. Simple as it, right? And also that purple and blue. Why do I use purple and blue? Very simple lah, because I like purple. So purple stands for 20 and blue stands for 40. Okay, right? So if you see blue is above purple, it just means that the market is bearish. If you see purple above blue, that means it's bullish. So using this simple moving average, very simply, we actually see that currently the market momentum is still on the bearish stance. There is no indicator to show that there's actually a change in momentum such that you can ride on the wave. Okay, so for you guys out there, I want you to take note that the momentum of the market has not changed. Yes, there is a breakout, but is it a real breakthrough? It's something that we want to investigate. Okay, and then if I draw a few more lines and show you more indicators, I think you guys will be like in awe. Okay, let me draw this thing. Parabolic. Okay, parabolic, right? SAR is actually another indicator for you guys to see the momentum of the market. It works very well when there's actually a extreme high and extreme low. So from there, you can actually see what is the current momentum and do a shorter term trade lah. Although a moving average, if you do a 50, 150, it will capture everything, but parabolic can help you to see little trends, little trades in the market itself. So very easily, right? You can see from here. Oh, sorry. Oh, you can see from here, right? That the market actually has 3 days of positiveness. Okay, what does it mean? Very good. The market actually, from this, you see that the market actually has a very strong push for the upturn, which is good lah. That means it means breakout lah, right? It just means breakout. But then if I add in more indicators, let me see whether I can add in more indicators. Force index. Yes, I want to show you this force index. Very exciting. Force index itself, right, also shows you that there's actually a very strong momentum in the market. Okay, and if I change this force, okay, and one more thing is about this force index, right? You see, the force index is going upwards. The price is going upwards. Okay, that means there's no conflict. Both are going upwards. Good, that means it is very strong push. All right, and if I change this force index to something else, let me see if I change it to MACD, right, you see for the past 3 days last week, there's actually a very strong momentum. Okay, in terms of MACD, yeah, the convergence and divergence indicator, that this particular portion, the MACD indication itself, is also moving upwards. So if these things, all the indicators are moving upwards and the price is also moving upwards, also serve to mean that there's no divergence lah, so everything's moving upwards. So it's good. There's actually a very strong indicator that it is actually a potential breakout for us to take effect. Okay, but I want you guys to really note that this is actually a flash up. One is a flash up. What goes super high, you have to come down. Okay, so don't rush in, don't FOMO and rush in to actually capture this this potential write-up that we do not know whether it's coming because the market is really, really very volatile. All right, guys. Okay. Yep. And then if I want to draw, I do want to draw another one for you guys also. Sorry, if it's too cheap, please let me know, yeah, so that I can actually go slower and explain to you guys more in detail about what am I actually doing. So far, so good, guys. Before I draw the next indicator to show you what is the potential that this write up will write until. If you guys are okay, just type okay so that I know. Good lor. Okay, thanks Francine, thanks Francine. Very sporting. Thank you, thank you, thank you. If not, like, I'm trying to talk to myself also a bit, don't know whether anybody can catch me. All right. So if I want to draw the next indicator, right? This is actually a Fibonacci. Okay. So why am I actually, combining so many things, right? Because why? It's like, when the market is always on the downtrend, bear, 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 and then suddenly it goes flush up. Why flush up? Is it really because people really want to spend more money, the consumer discretionary went up? Is it because inflation peaked? News is all lagging. It's like, something happened in the market and then the news decides to justify what actually happened in the market, right? So there's a lot of I mean, in terms of all these high volatility times, right? There's a lot of explanations lah that people can attribute to the market. So we really need to do our own analysis to see what is exactly going on. Because on one spectrum, people are saying that rebounded. On another spectrum, people are also saying that recession. So what? Right, guys? So please note that this is a very volatile time. You need to do more homework before you enter the market, and you need to actually have a strategy of your own lah. If otherwise it's a bit risky to actually enter. All right, if otherwise you guys can also consider dollar cost averaging. All right, enough of me talking, so let me draw my Fibonacci. Okay, so I draw my Fibonacci here to here, the top to bottom. Okay, I see that this currently the words are a bit that side lah. Then it covers the chart kind of covers the numbers, but nevertheless, show you. So we actually went up here. So there's a flush here. All right. Currently we close at 4158, 4158. Okay. The 1.6, the 162% indication, right, is actually actually reaching. Okay, which means to say my personal prediction, I might be wrong, I have no idea, I'm not a god. My personal prediction is there's high chance, right, that this thing might actually ride up a bit further before it retraces back. Okay, so it depends on your risk appetite lah, to see whether you guys want to actually enter to catch on the small opportunity here, of which I must say is super risky. Why? Because it's very near. It's actually quite near this particular line. Maybe 1 or 2 days, if it's 1 or 2 bullish days, it will just hit already and then it will rebound. All right, for those investors out there who actually wants to do it a bit more safe, highly likely you will just reach this particular point, rebounded, retrace back to the bottom, and then you can maybe buy a bit to actually ride up the wave. Okay, so all in all, right, it's actually very exciting time that we see that although there is no clear momentum in the market right now, because all the indicators are actually lagging, right, and it's not forward looking, it's all lagging. We actually know that there is actually a potential breakout that I really want you guys to actually do a bit of analysis to see what is your risk appetite of entry. All right. So for beginners, as I mentioned, right, a lot of times they will just decide to go in, but the market always retraces. There is no point in going to feel, the market go up, I FOMO, I buy in now, and then what happened? The market drives higher. So if I FOMO, let me show you what beginners will actually do. I use a highlighter lah. Okay, beginners will go up. Market up. I FOMO, I buy more. Okay. Beginners like to do this lah. Then everything dries up, the market manipulators make enough money already, and then the market manipulator will say, oh, I made enough money, time to collect my profit. And what happened? It goes down. Because what goes up, goes down. Then after that, beginner investors will, oh no, cry, regret, I don't know, because they don't really know what they are doing. But for you guys out there, because you guys are with us, all right, I want you guys to actually do this instead. Or rather, not that I want you guys to do it lah, because I cannot say for you guys, but I want you guys to consider, yeah, if you guys actually wants to enter the stock market right now, right, it's very simple. Just let it go up. Maybe it might possibly go up a bit lah, huh? Then consider the market will go down. After go up, must go down. You can consider buying at the retracement point. Not drawn to scale, sorry, not drawn to scale. I do not know how much the market will retrace. Not drawn to scale. The market will have to retrace somehow. Buy at the retracement. Not all in, cannot all in, because the market is very volatile. The situation in Europe, America, Ukraine, Russia is all not stable. Yes, China is slowly opening up, but supply chain issue is still everything not stable. So you only put in an amount, a sizable amount that you guys are comfortable with. Not all in, please, don't don't say I say one, I never say all in, please do not, all right. You can consider dollar cost averaging a bit here, and when the market goes up, you catch momentum. All right, catch momentum, especially when, if the simple moving average, the 20 over 40, right, crosses each other, the 20 above 40, you know that there is actually a change in, it's actually actual change in the momentum. You can consider buying in more. Yeah. When it really crosses over. Yeah, you can consider buying a bit more, and then see where the market goes up, goes down. All right. Should the market decides to go down, all right, or sideways, I want you guys to pay attention to actually what is happening in the market. Why? As I mentioned just now, the market is really very volatile. You need to know what is actually happening. So if you guys are more active investors, okay, you guys need to actually monitor the labor market, because unemployment rate is always one of the indicators of an actual recession. You need to monitor the consumer confidence level that is coming out. I think it's today, if I'm not wrong, or this week. Can't remember, right? You need to monitor these two, okay? And you need to monitor the housing market indicator. Are people buying more houses? Are people not buying houses? How's the mortgage going on in the United States and all? All this will give you a very high kind of gauge to whether a recession is coming up. Okay, if recession is coming up, this is why I say do dollar cost averaging only upon retracement, or when there's actually a very clear cut change in momentum that you want to either see whether you can actually catch at the opportunity. Okay, sizable trade, please guys, no all in, sizable trade at this two particular juncture, and monitor the market's momentum to see and leave the market whenever you felt that there is actually a potential downturn, or when you felt that it hits the ceiling. Okay, and whenever it hits the ceiling, it has to come down, sell at the ceiling. Don't latch on to greed, don't latch on to fear. Okay, just be very emotionless lah in the stock market, because well, investing is not a thing, a game to be very emotional about. You need to really stand out to actually see the market objectively on what is the momentum. All right. But nevertheless, for me, right, I personally feel that the market sentiments right now is very conflicted. Why? It's really very conflicted. That's why I say that that is actually I'm trying to be zen, like yeah, I must go zen. Okay, so I'm actually trying to say that the market sentiments right now for me, that I'm feeling that it's really very conflicted, in the sense that why? Just like I mentioned from the start, that bond price increase. I mean, sorry, the bond yield decrease because more people are buying bonds. When more people are buying bonds, right? Because people are risk adverse, then the question is, why is the stopping? Why is the market price increasing? So there's one conflict over there. If otherwise, If otherwise, if you know, like so far we also know that the housing sales, right, that has been reported in the United States, is actually on a downward trend. Why? Because everything is very expensive. Mortgage loans are getting higher and higher. Um, if people are not buying houses, right, and housing is always a first indicator to a upcoming recession, then is it a real breakout, right? So there's a lot of very conflicting informations in the market at this particular point in time. Last week, I would really want to attribute the breakout, the change in the breakout last week, right, more towards market manipulation. So hence, if you guys decides to really enter the market at the two particular junctures that I actually suggested just now, please do a very sizable amount that you can sleep at night. Yeah, don't enter the market and then after that, heart attack. Then no, sorry, touch it. So stressed about it that you cannot sleep at night. Please spread out, do dollar cost averaging, especially in this particular moment, this particular period of time that things are really, really very volatile and we do not know exactly whether it will go flying up or down. All right, very important to do your own due diligence and manage your risk. Okay, guys? All right, actually, I'm actually, finished sharing what I have to share with you regards to market momentum and the market outlook for now and my personal strategy for what I would do at this particular point in time. And yep, does anybody have any questions that I can help you guys to hey, thanks Mansin, thank you. Right. Do you guys have any questions that I can actually help you guys to, I don't know, to clarify, justify, or maybe guide you anywhere? I don't know. If you need any suggestions, just let me know. Right? Just type in the chat. If otherwise, if you guys like this sharing, just help me to like this video, like and share so that more people can benefit from my sharing. Okay, I see a question. Mansing asked this question, very interesting. Just focus on index. Okay. Okay, just to explain a bit more, yeah. So index, right? Why I choose S&P 500 is because it's an overview market. Okay, so if you look at the overview market, right, it gives you a very brief guide on what is the current trend in general, on the average outlook, right? Because it's a basket of 500 companies. If you are looking at any particular company to invest in and write a greater potential, because why? If you are very confident and convicted in a particular company, that that can beat the market itself, I would just say go for it. But typically, right, how I do my investment is you need to look at the general market. What is the market trend? What's the market momentum? From there, if the market momentum is on the positive side, right, then I will actually look into the particular company to do an investment. The reason why I do that, right, is because I wanted additional confidence level to actually, be very confident in entering and not stressed about it lah. Because I'm quite a lazy investor. I don't really like to every day see the market and stress about it, whether it's a red bar or a green bar. Oh, like that cannot sleep, cannot. Very stressed. Then I'll have more white hair. So I tend to like to look at the broader market momentum. If the broader market momentum is actually positive, it shows you a breakout, then I'll look at the particular company to see in detail whether the company has actually a change in the individual strength, in their individual momentum. If there is a change in the momentum, that's where I zam ah. I goes in and invest confidently lah. Then I don't stress about it already. Whether it goes up or goes down, I don't really care. But most importantly, I want to ride the momentum. All right, guys. All right, Mansi? Hey, thank you. So Mansing, just to let you know that I do have a weekly stock picking every Sunday on my Facebook group. So if you want to look at individual stocks or what's not, just follow me lor in my Facebook group. It's actually every Sunday at 4 p.m. My handle is Financial Missy. Yeah. So it's yeah. Yeah, so every Sunday I also do a sharing to trade engineer to talk about the market outlooks, whether we can I don't know, take any opportunity for any particular company in terms of fundamental or technical as well. So it's actually very exciting. If you guys are Hey, thank you, thank you. So if you guys find this video beneficial, just help us like and share so that more people can benefit. If otherwise, if you likes to likes my sharing, you also can actually follow me in my handle Financial Missy. I am on Facebook and Instagram with this handle. Right, so that is all for my sharing. If you guys have any questions, can type in the chat. If otherwise, I'll have my dinner. Thanks, host. Thanks, host. Right, right. If otherwise, I will go and have my dinner. And if you guys have any question, just feel free to type in the chat, tag me so that I can answer any of your questions out there. All's good, and I'll have my dinner then. Thank you, everyone. Thank you for being here with me on a Tuesday evening. It's really awesome to be here with you guys. If you have not had your dinner, please go have your dinner. If you had your dinner already, then please have a very, very good rest. Bye bye.